It's a historic day today as the Nifty has hit the 20,000 mark, and it's a privilege really to be speaking with Mr. Chauhan, the MD and CEO of National Stock Exchange. So I would like to learn from you in the previous 52 sessions, what has really stood out to you in this rally from 19,000 to 20,000?
In a way, last year has seen a huge amount of differences in the way the world works. China has started slowing down. The US, Europe, all of them have increased the interest rates. And that's basically has slowed down or have potential to slow down those economies, whereas India continues to march forward. And today, just next day of G20 summit getting over, the index reaching 20,000 tells you that the world is now happy about India, wanting to invest in India, and of course the Indian investors who are also investing in India in a big way. Earlier, they used to invest in real estates, in gold, in fixed deposits. Today, some portion of their income or their savings is also now coming to the stock markets, and many youngsters who have come to the job market first time are pretty much earning more than their parents are earning even today, and many of them might be into consumption, but they also save, and they have complete understanding of how the stock markets function on the mobile. Mobile has reached out, and that's why the Indian public digital infrastructure has helped us reach this level. But more importantly, Nifty reaching 20,000 is a reflection of the India's progress over last 27 years since it was launched in 1996 with a base of November 395 as 1,000. So in a way, it has given 20 times returns. But if you add dividends and rights and bonuses, probably it would be 22, 25,000. And no other country in the world has given those kind of returns, even in dollar terms, right? So in a way, India has progressed well, but I would say just the beginning. Next 30, 40, 50 years, we have a great opportunity to become rich before we become old. And that's where I think it's a good beginning. The systems are in place. Nifty is just a reflection of how India is progressing. And hopefully, if Indians continue to invest in its growth by investing in stocks for long term, I'm sure, and of course, everyone has to work hard to achieve what we need to achieve as a country.
Absolutely. So we have been seeing a lot of broad-based tailwinds that have pushed the rally upwards, and a lot of retail investor participation has grown over the years. With FIIs turning net sellers recently, what is your faith in the domestic market that is going to the retail investors per se? How do you see them sustaining this 20,000 level in the future?
In a sense, even last 1 year, you've seen the world markets going through some difficult churn, right? And because of the interest rates increases, and the world will have its own dynamics. They will have their own inflation and other things to worry about. But India is continuing to grow at a very rapid pace, and Indians who have invested, especially during COVID and post-COVID, because we have got literally almost 3 times more people today directly investing with us than they were before COVID. Like before COVID, I recall we had like 2.5 crore Indians connected to us. Today now we have 7.5 crore Indians directly connected, unique Indian investors, which is they represent probably close to 5 crore households, which is almost 17 to 20% of India's all households put together directly investing through stock markets. And it's for me an early day, sort of early days. But you can see a lot more people have much more trust in India's government, India's regulators, and of course India's economy as well as their companies, so that they are investing into India.
Fantastic. That's phenomenal, sir. And just one last question. Given all the excitement and buzz that we're noting with Nifty touching all-time highs, other indices also reporting all-time highs, what would be your advice to young investors who are looking to join in this excitement and participate in the markets?
So investment sometimes can be very exciting because you get to know a lot, but you need to stay invested for long term. Buying in the morning, selling in the evening is not called investments. Don't believe in tips. If you're not an expert, don't even indulge in derivatives. And even if you're expert, worry about your own risk-taking capability if you are going into derivatives trading. But if you are a normal person making a career in any other field, try to study about the company you want to invest in, stay long-term, and if you are not having that type of time, go through experts like mutual funds or portfolio managers or others who are well equipped to study those companies and give you advice.
Absolutely. Well, thanks a lot, Mr. Chauhan, for your time, and all the very best to you moving forward. Yeah. Thank you.